You walked into a bank for a home loan. You left with an insurance policy you never asked for, quietly buried in the paperwork you signed. It happened to millions of Indians, and it has been perfectly legal until now. The RBI just dropped new rules that could completely change how banks sell you financial products. The finance minister herself asked the most uncomfortable question. If your loan is already secured by the house, why extra insurance? And if you're new here, Dhandha Decoded breaks down India's biggest business stories. Follow right now so you never miss a case study. Stay till the end, because the numbers behind this will genuinely shock you. When you take a home loan, the bank already has protection. The house itself is pledged as collateral, so the loan is already secured. But then the bank sells you an extra insurance policy. They say it protects your family, but only if you don't already have life insurance. The bank could simply ask for an undertaking that gives them first claim on your existing policy. Clean, simple, logical. But instead, the bank bundles the policy and makes it feel like you cannot get approved without it. And it gets worse online. Banks use dark patterns, hidden checkboxes, and pre-selected options that bundle insurance quietly. These tricks work because our brains are wired to click through quickly. Casinos use the same psychology to keep people playing. But banking is not impulse retail. It deals with decade-long financial commitments. Consent must be clear and deliberate. So what changed? Rule 1. No compulsory bundling. Rule 2. Customers can buy products from any provider, not just the bank's partner. 3. Signing a form no longer protects the bank. 4. Suitability checks are now mandatory to assess income and age. 5. Banks must follow up within 30 days. 6. If mis-selling is proven, full refund plus compensation. Actual accountability. Now here is why this matters. SBI's bancassurance income has grown nearly 6 times in a decade to 2,966 crore rupees. Meanwhile, its total interest income has only doubled. The growth rate of these fees is dramatically outpacing core banking income. HDFC Bank's third-party income has grown 8 times to 6,600 crore rupees. Its share of total fee income has jumped to 25%. For insurers, banks account for roughly 50% of all premiums collected. That is how deeply embedded this channel is. These are still draft directions, but if this goes through, the way your bank sells you products will fundamentally change. Fewer surprise add-ons, clearer conversations, real accountability. This is the moment to pay attention. Drop your experience in the comments. Were you ever missold insurance with a loan? Smash that like and share this video. Follow Dhandha Decoded for more business stories. See you in the next one.